Welcome back to Markets Unscripted. I'm back here again this week with my co-host Jason Shapiro. I'm Matt Caruso. How are you doing this week, Jason?
Like I said before, I can't complain, and even if I did, nobody would care.
Well, if we take a look at the S&P in the past week, nothing's really happened. It's gone nowhere. But I think this is just a great time to zero in because whenever you move from the buy and hold type of thing or just like watching stocks in general and you start putting on positions, you start trading, there are all these subtleties that you have no idea exist. That when you look at stocks one by one or a commodity one by one, you're looking at that group. And then in real time, there's all these kind of these tricky interactions. So this past week's been really interesting because we were speaking last week about how the consumer staples were so far outperforming, how there's been really kind of this strange under the surface current where there's been some great winning stocks, some have been awful. And last week was a great example because we had a really bad break during the week where software, Bitcoin, anything under pressure broke. It caused a lot of volatility. So many just tech stocks in general got slammed to the floor. And now as we're here, like a week later again, the S&P is pretty much in the same place, but dramatically different outcomes, like sizable. And the leaders have continued to lead. So I think this is a great example of where the indexes are helpful. Some markets, stocks are more correlated and they all move together. Other environments, the indexes probably just confuse you more than provide a lot of help. So let's bring up the charts. Let's take a look at a couple of different stocks that we've been discussing. And let's first take a look at the S&P. So first up, I know we were talking about the staples, which what a breakaway, blowaway move. But the real reality has been software totally hammered, monkey hammered down, been terrible. But we've been discussing about a lot of the leading stocks, leading themes, talking about optics. We've been talking about how the AI supply chain is critical. We were talking about different commodities and energy. And it's just so important because IGV has been the one group that has been, you can't question. It's Microsoft's software as a service, best margins. How could you compete against that? Well, you walk into 2026 and this is obliterated. You step on over to, let's bring up Bitcoin, and this falls off a cliff. If you bring up Ethereum, likewise. And this just goes to show, there's people who are positioned like MicroStrategy, and these have been dramatic moves. We can rally from here. But the point being is if you get caught off guard on these trades, if you just kind of fall into the thought process of like, oh, we're going higher, laser eyes, we can't miss. I mean, you're taking on a tremendous amount of risk. And at the same time, you're not paying attention to what's working. We've been talking about Corning now for a couple of weeks. To me, even though I do this all the time, usually markets and stocks are more correlated, but these times here, it still always kind of almost surprised me a little bit to see like such strength in some stocks. I mean, Corning on a lot of more recent themes like we've been talking about, but to think this is like a 175-year-old company still innovating and bringing new things. But the tape is what told you. This had not done anything for a long time. I mean, okay, we'd been going higher last year, but this wasn't the market leader for a long time and all of this kind of stuff. And now just tearing up the board and been so strong. And the whole group. And this is where a lot of the times the themes, when you dig in beneath the surface, so critical. We were talking about Viav, which has been very strong, LITE, Teradyne, and all of these have been very much like geared towards AI, but the stuff that people aren't looking at, it's not the NVIDIA, it's not the AMD, it's other stuff behind the scenes. So just an interesting week of study, whereas, commodities usually are, pure play, you're trading copper, you're trading sugar, or if you're buy and hold, just holding the S&P. But when you get into the business of taking positions and managing risk, just the subtleties under the surface can be so dramatic. Is there anything like this that you've seen, even on your side, on the commodity side, Jason, or any stocks that have caught your eye similarly in the past week?
Yeah, I think that this year has been a great year to observe what I would arguably call the Matt Caruso theories, right? You sit here every week and you talk about these concepts of relative strength and all this. And this has been a great year for that because we've had huge differences, right? The market's gone nowhere. The S&P's flat, right? But you've had like software stocks down an assload. And you have things like energy and materials, which are things we've been talking about, up a lot, right? And that's working. And it's been great. Like the last few weeks, you could have done it. The market was kind of going down a little bit, and just the stocks that we're holding, now that we're going up again, are going up the most. I would argue a little bit with the whole staples thing, because there's a difference here that I think is important. Okay, tech stocks are coming off. Risk is coming off. So people are getting into staples as a place to park their money, right? So therefore, that's not that great because then when tech stocks come back, then people will get out of staples, right? That's just more a guess on are people going to be putting on risk on or are they going to be taking it off, right? That's just a way to play that. You can play that if you want. Hey, I think people are going to be getting risk off, so I'll get in the staples. Okay. But I like it more of people are getting out of this stuff, but this stock, which is in that group, is not going down.
Yeah.
I'd rather be in that because then when those things do come back, that one is going to come back the most, right? There's a reason why it can't go down, right? Another real, to me, example of this was something we had talked about a lot on earlier in the year in my Discord was the possibility that there was going to be some kind of crypto. I didn't think it was going to be this, or I didn't know that it was going to be. Well, I never know. I didn't guess that it was going to be this early in the year, but at some point this year, there being sort of a crypto problem, and that liquidity issue flowing into the rest of the markets. Well, there was a crypto problem, but it didn't flow into the rest of the markets. The stock market could barely go down. These days, crypto is going down 6, 7, 10, 12, 15%. And the stock market could barely go down. So that in itself is saying, look, this market does not want to go down, right? And then within that, what are the stocks that are performing best? Find me a stock that was on its high. What was that? Thursday, right? Find me a stock that was on its high on Thursday in the tech space, or in the AI space, right? Which is a pretty wide space these days, right? Those are the ones you want to be in. And we've talked about these, right? The ones that are not the popular ones. The energy space, which I consider to be an AI space now, right? Look at Chevron, The, right? I mean, look at that thing, the material space, right? These are things that are way underweight. I think you could argue that Corning is a material space, right? These are things that are way underweight relative to the other stuff. So it's great that they're way underweight and they're holding up in a time of kind of a crappy market, which means when the market turns good, they're probably going to do much better. We talk about that kind of idea all the time. You talk about that idea all the time. And here it's a great time to see it actually working because there's a lot of differences here between these stocks and those stocks, right? The good and the bad. And I think the point you were making earlier about, sitting through something that goes against you 50%, you shouldn't have had to do that if you're watching the tape, all right? And this is not a retrospect thing because I do a daily market close every day. And I talk about, hey, here's kind of what I think stocks did today, and here's what bonds did, and here's what currencies did, and here's how this did, here's that. And almost every day I'm on there going, look, crypto trades like shit. And if you want to believe that this thing's going to 1 million, Bitcoin's going to 1 million, I say this almost every day, right? Then that's fine. And I hope it does, okay? But it ain't going to 1 million until it acts well, right? 1 million from here is like a 12-bagger, right? The S&P ain't 12-bagging, in a short period of time at least, right? So if if Bitcoin's going to 1 million, the first thing it's going to have to do is start outperforming, So you have to just wait, be patient. It's done nothing but act like crap since October, almost every day, right? I mean, there's up days along the way, but it wasn't even great up days, and it wasn't really unexpected up days. It was when risk assets had up days, so crypto went up. So you really didn't need to be in that, right? If you've been playing the tape. If you're an investor and you're a dollar cost averager and you think that crypto is going to 1 million because the whole fiat currency world is, whatever your reasons are, I'm not here to argue. You probably know more about it than I do, okay? But if you're a trader, well, first of all, even if you are an investor, you always got to keep in mind, you, believe it or not, you might be wrong about the future. You might have the future wrong, okay? And if you have the future wrong, you don't want to go broke, You know, you can be wrong. I talk about this all the time, right? Be wrong. We're wrong all the time on a million things. Just don't lose money, you know, or just try not to lose a lot of money, right? You can't just be buying it because you're so convinced or some jerk told you that, or just anybody told you that crypto's going to 1 million and you've bought into it, so you're going to buy every dip. That's not how, you have to look at the tape, you know. Even if you're dollar cost averaging and you want to add to it because it's gone down, okay, good. Wait until the tape trades well and then add to it.
Well,
That's
you know,
that's
speaking
the
of
key to
tape,
all this stuff. That's the key to all this stuff. The tape is everything.
well, speaking of tape, look at Bitcoin. This is back in 2020. We have the Nasdaq in the bottom chart. We have Bitcoin in the top chart. Look at what a difference in character it was. Like, you know, here on October 21st, Bitcoin is breaking to new highs, whereas on October 21st, the Nasdaq is not even near its highs. By the time the Nasdaq broke to new highs in November, I mean, Bitcoin had already gone from 12 to 20.
It's the
And that's
same
when
principle. It's the same
yeah,
principle
exactly.
again and again and again.
So you didn't have to kind of laserize it. You could have just at least waited for the tape. And the problem is it's not about being right. You know, like everyone wants to learn when to buy stocks, what stocks to buy. The reality is, step one, you have to be able to know when you're wrong, when you're not right. Because, you know, I don't know if you said it last time too, but a trading buddy of me used to say this. I think you said it last time, and it stuck out back in my head. You know, one of the keys to this business is being able to stick around long enough to get lucky. And whether you
That's
call it
it.
lucky or you really nail one, whatever you want to call it, but you know, something's going to come up. You're going to have a good idea. You're going to put it on with size, and wow, you have the chance to really kind of rock and roll. Look at the way markets move. But the key is you can't blow up between now and then just because you really like something and you had your heart tied to it. You know, you're cheering for like your football team. You know, you think, oh, I got to vote for them because they're my, you know, I have the picture of the stock on my wall. That doesn't mean anything in the market. It's cold-blooded. You know, so I think this is a perfect example.
No, that you have to just watch the tape, and you can love something. It's fine, but that doesn't mean you have to put all your money into it, right? Because you could be wrong. You know, my football team sucks. I wouldn't bet on them. It doesn't mean I don't want them to win. I do want them to win. They just never do. You know, um, so it's just you can't say it enough. You can't say it enough. You know, don't marry a
And
position. These are all old trading adages, right?
mhm.
Don't be married to a position, right? There's a reason why these adages, is that the right word?
Yeah.
There's a reason why these things exist and have existed for a long time because they're freaking true, you
Yeah.
know? And Bitcoin was the perfect example here. And that one that you just showed was great because it's the perfect example on the other side.
Yeah.
I would have been sitting there the whole going, hey, in fact, I was at the time, I remember specifically, but exactly what you said. Look at how much this thing is outperforming. This is where you want to be.
Hmm.
Well, ever since October here, this thing has been underperforming. And what's been really cool about it, I think, when I read these Bitcoin people, is everybody says there's no reason that it's going down. That's the most dangerous thing there is. You know,
Yeah.
a shitty trader interprets that as there's no reason for it to go down, therefore I'm going to buy it. Right? I think a
Hmm.
good trader looks at it as there's no reason for it to go down, yet it is. So I'm going to step out of the way because something's wrong here. Right?
Yeah.
That's trading logic. Right? Trading logic is different than normal logic.
It is. It really is.
You know,
Yeah.
trading logic is not I'm smarter than the market. Trading logic is the market is smarter than me.
Hmm.
And it is because the market is everybody. And everybody is combined, you know, it's like the wisdom of crowds thing, right? Everybody's combined knowledge is, believe it or not, greater than yours. Even if you're the single smartest person out there, you're not smarter than everybody combined. So when the market is doing something that makes no sense, that's when your antenna really has to go up. You know, it's one thing if it's bad news and it goes down. Okay, I get it, right? The, but when there's no news and it's going down or up for that matter, right? That is not a thing to fade. I knew a guy that I worked with that used to do that all the time. He'd be
Hmm.
like, oh, this stock's up 5% for no reason today. I'm going to short it. Or this stock's down 5% for no reason today. I'm going to buy it. And look, sometimes he would make money because you get this mean reversion. But over time, where do you think he ended up?
Well,
You know?
it's never for no reason. It's that you don't know the reason,
That's right.
right?
That's right. That's right.
Yeah. And you know,
And
so
the
it's
reason
interesting.
comes out later. Look, as a person who trades, who spent his career trading market turns, right?
Mhm.
I can tell you straight up, I buy market turns, man, right? Major market turns. Doesn't always work, okay? But when it does work, markets bottom on bad news and
Mhm.
they top on good news, right? That's why I always talk about news failure, right? A market will bottom, at least for my type of trades, when everybody's super short because there's been nothing but bad news. We get more bad news, market can't go down anymore.
Mhm.
Market bottom, it starts to rebound. That ends up being the bottom. The good news doesn't come out for weeks. The market's up 20% by the time you get any good news first. That's how
Right.
markets work, right?
Yeah.
So if you're going to wait for the good news, like you're late to the party, right? But the tape would have told you long before, right?
Mhm.
So again, what I'm saying is to be like the market's going down and there's no reason, so I'm going to buy more. Wrong.
And you know, this is why I love doing this podcast with you because we both come at markets in very different ways. Like I'm a trend follower, I'm looking for relative strength. You're picking bottoms, and you're looking for those turns, and same at tops. But the core principle of how we operate is exactly the same. We're focusing on the different parts of the meal. I'm looking for that, core middle ground. You're looking for the turns, but the same trading logic holds true, you know. And so, one thing I want to talk about, we're going to get to these stocks and things we're looking at this week, what's important in the market. But I think this just brings up a good point because, we opened up talking about relative strength. Then now we're talking about turns. The reality is context is incredibly important when you're looking at these tools. When I first started learning technical analysis, I said, wow, this is the easiest thing in the world, right? All these tools are going to tell me what to do and I'll make money. And so I got a software, it was called Metastock back then. I think they're still around, I'm not sure. And so I learned candlesticks. And so I said, great, I'm just going to scan these candlesticks every night and I have this like easy list of stocks to make money on tomorrow. Guess what? It doesn't work. First of all, you end up with like 500 stocks a night. So good luck trying to get a short list from there. And two, without the context, none of this matters. So there is like one candlestick pattern that I like to use. Let me just bring it up right now. And I think it's very similar to kind of what you talk about. So let's talk about Micron. This is a trade I put on earlier this year. Or again, why was I focusing on this? Well, let's just bring up the double screen a second. Look what Micron was doing to start the year compared to the Nasdaq. This is the Nasdaq. And Nasdaq was doing nothing, and Micron was already leading higher. So, for and understanding the AI move and the rest, that was the context. The timing of things are different. So, I had a position coming in with Micron, and then you can see on this day here a kicker pattern for candles, for what people don't maybe are aware, is when you have a bad closing day such as this. So red means we opened up here, we closed at the bottom of that candle. If you open the next day above the open of the prior day, you completely negate all of the prior day's selling. There's been a bullish overnight catalyst. Do I take this trade all the time? No. But contextually, if I think a stock is tremendously strong and I have a position and I want to keep adding to this position, even though the market's weak, but I think this is about to have momentum push higher, that kind of using weakness that turns into strength, that I call it an expectation breaker. I know you call it news failure. It's slight variations of the theme. A good example of looking at how you can use both relative strength and also the concept of weakness is faded to the upside. But the context, like this candle signal, it's old, it's known, a lot of people use it. Like you could screen for this all day, it won't do anything for you. The context is key. You have to go from 10,000 stocks down to 15 that you're watching, know which ones you want to focus on and when to put on, how much risk you're taking on, and then press that trade. So this is a good example of like the context behind the trade is key. So for example, the reason I bring that up now is because you're talking about picking turns. And so for a lot of people, they'll say like, well, how's that different than the guy who was just saying that Bitcoin's going to keep going back up? The context is everything. You're looking for positioning that's one-sided. You're looking for news failure. Maybe is there an example we can bring up, Jason, something that you're watching currently and we can kind of have a sense of it. But I just want to really kind of nail that in. It's kind of like the educational point for this week.
Yeah, I know a guy who's a technical analyst, and he's always saying, I don't care about anything except the chart. I don't care about the news. I don't care about this. I don't care about that. All I care about is the chart pattern. Okay, I disagree,
Yeah.
right? I think two things that are breaking out to the upside. One that's breaking out because there was just a piece of incredibly good positive news, and one that's breaking out for absolutely no reason. I'd go with the no reason all day long, right? Because if it's breaking out on good news, then a lot of people are chasing it, and then all of a sudden there's a lot of weak money in there, right? Whereas the one that's breaking out on no news, nobody's chasing it, so there's not a lot of weak money in there. So to me, that has a much higher probability of continuing and not having this huge volatility, right? If it were as easy as I sit here and I buy breakouts on good news, then this game would be easy as hell,
All
right?
the machines would have it all. You'd have no chance at ever making
Right.
it.
And we know it's not easy as hell,
Yeah.
right? Just sit here all day, wait for stocks to break out of a chart pattern because they had a good piece of earnings news or something. That would be the easiest game in the world. And we know this is not the easiest game in the world. It's one of the hardest games in the world. So when I hear context, that's what I think about, right? It's great, buy breakouts, buy chart patterns, right? But there's a difference between the same chart pattern.
But it's also a false choice because, and I've heard this argument. I have a technical analysis degree. I have one in fundamental analysis, and each group has they're always kind of trying to protect their own type of thing. And so the arguments will come up like that. Like, you don't need that argument. At the end of the day, I have a CMT, so I'm a technician. I have my CFA. I know that doesn't matter in trading. You want best odds. You want to be able to put what matters together. Context is key. If you told me just fundamentals or just charts, I would choose charts because it's price action. But I don't have to make that choice. So why limit yourself? I agree.
I agree. I always found people that argue that stuff. I'm like, who gives a shit, man? Just make money.
Yeah.
You know what I mean? Like, I don't care if you like it or you hate it or just, people are always trying to justify their life and their decisions, right? Yeah. If you went and spent, a lot of money and a lot of time getting an MBA, then you're probably going to justify, fundamental analysis, right?
Yeah.
You have to, because why'd you spend $200,000 if it means nothing, right? But the mature people say, who cares? Let's just figure out what makes money, right? For me. What makes money for me, as we talk about a lot, is maybe different than what makes money for you. But what makes money for me? That's what I should be focusing on. But yeah.
Just a funny story. When I started trading, I was 22 when I got hired. I joined the market making desk. And I was like 10 years younger than the next youngest guy. And I remember coming there, and I was just out of university, and it was all floor guys. So I didn't get to work on the floor. They had closed it, but I loved it because they were all from that era. So it was all these old cliches and things, the adages they would say, And I remember, now he's a friend of mine, but he was saying, he's like, Matt, he's like, your education doesn't mean anything. He's like, we had a PhD come in here. He was out in 2 months. We had a guy with a master's came here. He's like, I have a high school degree, but I've been trading for 25 years. He's like, education doesn't mean anything when it comes to markets. They just know that before you get too into the books. He's like, the books matter. He's like, but not more than what the market's doing. So
trading for 25 years, that's an education right there.
Yeah, exactly.
A formal education maybe doesn't matter, To define what education means. To me, an education in trading is you've been trading. That's an education in trading, right? You're going to learn this shit in books. I went to a master's degree in finance. I did undergraduate in finance and economics, right? Which I got to say, if we have a second. We have a second?
Yeah, we got a second. I think so. I'll check the producer. I think we're good.
One thing that's been on my mind a lot this weekend, because on the weekends I like to kind of listen to some podcasts, like a lot of people. And I always gravitate towards, market type of podcasts, of course. And I've been listening to a lot of AI podcasts. There was one that was on this last week with Musk that was like 3 hours long. It took me a long time to get through it. It was on this, I have it written down, Dwarkish Patel and Stripe was the name of it. And then I was watching some other ones too, and it's become very clear to me. Look, I went to school for finance and economics, all right? I was not a good student in high school. I was horrible. I got to college. I was taking a lot of economics courses. And for whatever reason, I was really good at it. Mm-hmm. It just, for whatever reason, it clicked with me. I could go to my economics classes. I didn't have to do any homework or any of that shit. I could go to the class, listen to the professor, pick it up, and just ace it, right? It just made sense to me. It was the first subject ever that made sense to me. And then even when I went and got my master's degree, it was the same thing. I was in London, and the professor was this English guy, Sir something, and it was the same thing, And I would go and talk to this guy in his office afterwards, and he even said to me, he's like, you have a real feel for this macroeconomic stuff. So And I could sit there and I could make, whether I was right or wrong, I could make what I thought to be somewhat intelligent arguments. If I was arguing with you about some economics thing, I felt pretty confident. Not that I was always right, whatever, but I felt confident I could make a pretty good argument. I have zero ability to understand. I never took a class in physics in my life. I do not know how to even program a computer, right? I don't know what these people are talking about. Literally. I don't know what. I was writing some of these. I don't know what any of these words mean. Claude bot. And these are like the most basic things, right? Edge AI, Malt book, open source versus closed models. I don't know what any of these things mean. Can I get on OpenAI? Can I get on ChatGPT and put a bunch of stuff in there? Yeah, I do that, right? But I don't know what any of these things mean, right? Can I understand the concept that it takes a lot of energy? Yes. Do I know that it's true? Do I know what these numbers even mean? When you tell me we need X number of gigawatts, am I able to put in my brain what that even means? Not really, you know? I could figure that out by doing a little bit of research, but the other stuff I'm never going to know. I'm never going to know. And that's where we are now, right? That's what matters now on a macro basis. It's not so much economics. It's the economics of AI. And I have no way of having an edge in that. None. And you know what? I think it's good because it will stop me from doing stupid things because I think I know what I'm talking about. And I can just go with very general ideas, right? I can watch these podcasts and hear people talk about the fact that we need shitload more of materials and a shitload more of electricity and a shitload more of energy, right? And I can say, okay, that makes sense to me. And then I can look up the things that fit into those categories and I can watch the tape and I can watch how they react and I could go with the ones that are working, right? And I don't have to argue with it, you know? So I think in a way it's an advantage. So that was my first thing that I wanted to say.
I just want to chime in on that for one thing because I think it plays to our advantage because what I've noticed in the past is when somebody gets really into the specifics of it, it may help in some scenarios, but it'll also really bias you. Like this morning, I think it was this weekend, Micron, which is MU, we were looking at the chart before, their data storage products there's been crazy demand for everything like data storage, hard drives and all the rest. And it was down this morning because they got passed over by NVIDIA for the next generation chips for a South Korean company.
Right.
Do you know what kind of level of knowledge the people at Micron must have that are actually even building these things? And they were still passed over by even better specialists in South Korea that are working on other types of products. How are we as generalist investors looking for opportunities and positioning capital, if they didn't get it right when they were designing these things, how are we supposed to know better without the inside company knowledge of both products and specs? And you're barking up a tree that's impossible to know. And so
Never. And the Wall Street analysts also don't know.
how can they? Like I'm saying, if the company
The Wall Street
themselves
analysts are a bunch of
how can they?
MBAs, man. I'm not an MBA. I have a master's degree in finance, but same thing.
Yeah.
We don't know this shit. Physicists know this shit. Okay. I saw one podcast. They were the guys from Princeton who work in whatever that lab is in Princeton that did the atom bomb and all that shit. They were saying that AI has caught up and possibly surpassed their ability to produce knowledge. So I'm just saying, like, the Wall Street analysts don't know this crap either, right?
But but then I think some people then will kind of defer and they'll be like, oh, well, just make an AI trade. One thing and maybe will be undone one day because I was a market maker and I laughed when the first AI things came to the market making. I said, they're never gonna automate us. I mean, we're making markets. We have to manage all these stocks. And we were the first guys. Everyone met AI now. We met them 15 years ago and they put us out of business. But
Right.
you're looking for positions. The one thing, because if you look at all these funds, whether it's Fidelity Contra Fund, you're managing hundreds of billions of dollars. That's just one Fidelity. The access to information and stuff that they have is just far superior than we will ever have. But they have a size problem. So if you're Fidelity Contra Fund, you want to put a 1% position in a company, maybe you have to buy $10 billion of stock and the market cap's only 25 billion. Guess what? You won't be able to put it on without showing tremendous relative strength and an extremely positive tape in that stock. So, the very short-term day trading was eaten by HFTs because it became really like a physics question about how do you get to the price first and faster and turn around and get better short-term knowledge. But for trends, there's a lot of uncertainty, like we said. Does Micron have the best product? Does somebody else? We don't know, but whoever does know, it takes them weeks, months to put that position on. And so it's going to come through in the positioning, it's going to come through in the relative strength. That is the best tool I think we have in our arsenal. And there's no, even
what reading the tape is all about.
yeah, and if someone knows the future, they can't ignore the steps of having to put the position on. So that is, to me, that is, if you really want to have a chance of catching some super stocks, super wins, super trades, it has to be the positioning, the reaction, the tape has to be top of mind because that includes everything you need. Yeah.
These are the rules of the game.
Yeah.
No, I've never seen here's a rule book for trading. But there is one, and I really believe we are passing those rules on here. And I didn't make these rules up. You get them from different sources, right? If you read the great traders and what they've talked about, these are the rules that they talk about.
Yeah.
And there's no reason why you should go into this game without knowing those rules. Because you're going to play by what normal rules are. Buy low, sell high, what sound like logical rules. But like we said before, market logic is different than normal logic, right? Yeah. So it's important to know these rules. I'm not here to bullshit people. You know what I mean? Like, I'm not trying to fool people. Hey, buy strength because I'm selling strength and I need you to, be the bag holder to the strength so I can sell into it. Like that's not what I'm doing here, right? And I don't think that's what you're doing here, right? We've been doing this game a long time. We have, at least I can speak for myself, I've made the other mistakes and I have over the years had to adapt. Otherwise I wouldn't still be here. I would have been broke and I would have had to get a real job or something, These are the rules of the game and it's important to know them going in.
And it's tough because you have to boil it down to the rules of the game because, again, so I started off 2008, January 08, great time to start a pro career, right? So that's when I started in January 08, and there were no real algos or HFTs yet, like where we were making markets in Canada. And they came out like in 09, and they were dumb. Like I remember we used to get called by the regulators because you could bid, and they would just always try and front you by a little bit, and then you could hit their bid, kill your bids, and then the stock would fall and you could like cover on the downside. Anyways, not allowed. You're not allowed to give, misleading bids or whatever, like by the rule book, although I'd argue HFTs do it all the time, but if you're a person, you weren't allowed. Right. And so, but, all those little games worked and they worked until the machines got stronger and stronger. Well, when the desk finally closed because, the bank wanted to like de-risk and they went to fully automated and all this kind of stuff, it was hard for a lot of, buddies of mine to kind of make the switch into different styles and to do different things. And most didn't even though they were great traders, like it's about being a good trader, but also getting, I think, enough of the core knowledge of the playbook of how this works so that you could even adapt if you have to. Like if I feel confident, like with the rule book and the way you do things in terms of buying the turns. If I said, Jason, you're not allowed to do that anymore. You got to make money, but you can't do the turns anymore. It would be the same core logic and you just rework it into a new strategy, but you have to follow that playbook because that's how markets work. And I think that's what allows people to be successful in different styles, but still following that same playbook.
I think that is a great point. And you were making it earlier, and I probably cut you off knowing me, but I think the point you make is extremely relevant. You trade breakouts and momentum. I trade market turns. They're almost exact opposites. Mm-hmm. And yet the rules we're playing by are almost exactly the same.
Yeah.
Because it doesn't matter how you trade. All these things are the more important things. I always say flip a coin for all I care, right? But, know where you're going to cut loss, know how you're going to ride the gain, have a plan for what you're getting out. They all have to match. We've talked about this before, right? Why you're getting in is exactly the same reason as to why you would stop out is exactly the same as to when you would get out. Why you're getting in determines those other things, right? Because you're going to get in for a reason. It's going to be wrong at a certain point. That's where you're going to stop out. It's going to meet its target at a certain point, and that's where you're going to get out, right? Doesn't matter if you're turn picking, if you're momentum buying, if you're breakout trading. It doesn't matter. All those things are how you do it, right?
Hmm.
So I think that's the most important thing there is. Yeah, I think that's just so important. And you made that point earlier, and that's right. So
So we'll pivot here to some of the current markets. Before we do, if you're enjoying the podcast, like and subscribe to the podcast. If you want to leave us a question, you can go to marketsunscripted.com. Also, you can always reach Jason at crowdedmarketreports.com and my website, carusoinsights.com. But let's head over to the current market. Let's take a look at what's going on. We'll get to stocks in a second. But Jason, is there one of the commodities or one of the futures you want to take a look at before we jump into some more stocks?
sugar is my main focus here. I'm sure that most people out there do not trade sugar. I don't trade sugar very often, but it is the most crowded market in the world right now. Not only relative to other markets, but relative to its own history. Can you pull the positioning stuff up or no?
Yeah, I'm bringing it up. I'm looking for what's this? What's the future symbol again for sugar?
SB.
SB. Okay, one second. I used to trade futures a long ways back, but it's been a while for some of these, especially the softs. Okay, let me switch chart here. Here we go. Oh yeah, wow, look at that.
So you can see where the speculators, the green or the shortest, you can go, I don't know how far I can go back to this chart, but you can go back forever. This is the shortest they've ever been.
Let's go back 10 years. Yeah, if you go back 10 years.
Right. So again, does that mean that the market has to turn? No, it does not mean that. It means that should the market turn, it can be violent the other way, right? It's all just risk reward, right? It could not turn and you can get stopped out of this trade, or it could turn and it could be a violent move because they're so short. If all those shorts have to start covering, right, that could be violent. I haven't bought it yet because I don't just buy it just because of the positioning. I'm waiting for some kind of market confirmation. As an example, tomorrow we have the WASDE report, which is the big monthly report for agricultural stuff. Sugar is on there.
What is that? WASDE report? What's
WASDE, World Agricultural Supply and Demand, something or other.
okay? Is that something that they put out like free, like economic data, or is it a paid for report?
Oh, it's free. It's free.
Okay.
Comes out at noon. You'll know because at noon the markets will move, and you'll know if it was bullish or bearish, right? So what I am hoping for to get this trade on would be a bearish report for sugar. I kind of have been reading a lot about sugar this weekend and what's been driving it and what drives sugar. I don't know a lot about the fundamentals of sugar. I know a little bit more now than I did last week because I spent the weekend reading about it. It's pretty simple. Brazil is the big sugar export, so the weather in Brazil, and then also the idea of ethanol. Sugar gets used in ethanol, so should ethanol prices go higher, then sugar should go higher with it. Right? But I'm hoping that the WASDE report comes out real bearish tomorrow, and I'm hoping that sugar sells off on that, and then rebounds and closes higher. Mm-hmm. And there's my news failure, and then I will get long that. For people who don't trade futures, there is actually an ETF on this. CANE. And if you buy that, I was going to make a joke, but it's probably inappropriate.
Leave that for the blooper section. So, for example, let's say stuff comes out that's bearish and sugar has a drop. What if it reverses the next day or 2-3 days? Does it have to be a same day response to the news failure for you, Jason?
For me, it has to be same day.
Okay.
Doesn't mean that that's the only way to do it. Mm-hmm. And I will preface this entire thing by saying again, even if that happens, even if there's bad news and the market goes down, then it rebounds and it closes up, that's my trade. Those trades have worked for me historically 36% of the time. Okay? So don't come killing me if that happens when you buy cane and then it goes through the low. All right? Because if it does that, then what you do is you get out, and you lose what you risked. knowing that that was where your stop was. For me, it's 70 basis points. Other people have different numbers that they're comfortable with. I'm comfortable with 70 basis points. If it does that tomorrow, reverses on bad news, and I buy it, and then it goes back and takes out new lows, I will lose about 70 to 75 basis points depending on my slippage. And I will be alive to get lucky, hopefully, on the next one, right? But the point is, if it's right and it works and this thing starts going up and these shorts start getting squeezed, I could make, instead of losing 70 basis points, I could make, I could make 10 times that, right? Mm-hmm. And that's obviously the idea over time of what we're trying to do here. And if you really get into it, which I don't really need the excuses for me, I just do what I do. But, if we're looking at the idea of energy possibly going higher and crude going higher, sugar is also somewhat of a function of ethanol, and ethanol will be a function of crude. And in fact, I argue just about all commodities in one form or another at some point are a function of crude oil, right? Mm-hmm. Crude oil goes into everything, right? The manufacturing, the processing, the shipping, everything, right? Mm-hmm. So crude goes up, most things go up, commodity-wise. So there's that possibility too. This might be a good way to play that as well, But anyway, that's what I'm looking at commodity-wise. That's a counter-trend trade, obviously. Most people don't do that. I'm not saying people should do this. I'm just showing you what I do and what I'm looking at.
I'm just curious, Jason, looking at if you interpret if it's at all part of your process. Like I noticed that the commercials are more long now than they were back in November, even though the market hasn't made a lower. Same thing. I think they're just a little bit shorter now than they were back in November. Do those kind of divergences start to kind of play a role for you too? Like, the shorts are still pressing their short trade, or commercial, and we're not breaking lower, or is it?
I love the idea. I don't trade it based on that, but I do love the idea. It's similar to the old technical analysis thing where people use volume, right? And they say, hey, the market's not making new high, but volume's going up. That's a bad thing. Higher volume should push the thing higher, right? Or the opposite. Sometimes it is going to new highs, but volume is dropping, right? Yeah. I think people see that as a bearish thing too. So in a way, you could say this is volume going up, short in this case, volume going up, and yet the market not making new low, right? Mm-hmm. That could be an interpretation of that as well. Not how I trade it, but could certainly be an interpretation of that.
And when you're looking at, you're saying closing up the same day, are you using like only the old floor hours? Or are you using like stock market hours, 24 hours?
I do floor hours.
Floor hours, hey? Okay. Cool.
Just because you have to do something, you know what I mean? I actually got very lucky today on a trade, because another trade that I have set up is short Canadian dollar.
Okay.
And arguably, there was bullish news on the Canadian dollar on Friday, and the Canadian dollar closed up. So therefore it wasn't a failure, but after hours, for some reason, in the last late hours of the day, it went down, and we could have called that. See, it doesn't even show up there, right? Mm-hmm. But after hours, the Canadian dollar ended up closing down. And so it's like, oh, well, was that a news failure? And I'm like, well, for me, it has to be during the floor hours, so it's not for me, and so I didn't take the trade. And thank God I didn't, because I would have already been stopped. I would have been stopped by a lot, and there would have been slippage and all that. So look how much above, the Friday high it is. If the Friday high is my stop, right? Look how much slippage there is from the Friday high already. So just total luck that I didn't that it didn't do that. Hooray for me. Sometimes it's better to be lucky than good, but. Just an example of where I didn't take a trade because it wasn't during pit hours.
Well, but that question's been coming up a lot for me, even with clients, because, there's talk, I think Nasdaq wants to go to a 24-hour trading schedule, although there's already overnight trading, and there's already after-market, pre-market trading.
Yeah, there is.
But, I even for myself, people ask, if there's something that you're looking for, do you consider pre-market and post-market action relevant?
Yeah,
I don't, because in my view, it's not just where the price is. The liquidity is important too. Like after hours, if there's a wide bid-ask spread and I want to make the chart look good, I could buy 100 shares at $2-3 higher. Is that a breakout? No, or whatever. Is it a failure if it trades down $2 on 100 shares? No. So how it'll change in the future. Like, our fund's going to be really with liquidity, be trading all of these different stocks 24 hours. Like, I feel like even if commodities, which there's much fewer of them and they're used in commercial purposes, if they have their windows of liquidity, I find it hard to believe that a mid cap, is suddenly going to be tremendously liquid. Not that it can't be traded, but the
Yeah.
liquidity that you're going to take the signal from, I think, is what's going to be important. But it's going to be
Yeah,
interesting to see.
it's hard, man. I mean, look, these things, futures trade all night, right?
Yeah.
And what I've noticed, and this is a totally unscientific fact, but I'm up at night. I watch what the markets are doing at night, and what I've noticed is the movement at night in like the S&Ps and the Nasdaq, all the futures, end up being almost irrelevant to what happens during the day. It's probably the best time to try and manipulate a market because of the lack of liquidity, right?
Yeah.
That's what I noticed anyway. I mean, just last night, the Dow was up at the open last night, 150 points, something like that. And by 10 o'clock this morning, it was down 200 points.
Well, it's funny because even on Thursday, like, markets closed terrible and so many stocks looked awful. And then after hours, they were down even more. And I
Yeah.
was like, oh, whoa, that's a wild market. Then, like, by next day, it's like massive rally.
Yeah.
What happened? I don't know.
That's what I'm saying. The night markets are, to me, some of the, and I still look at them, and I probably still, in my mind at least, overread the message. But truthfully, I don't think that they're very good. I think that they're pretty irrelevant over time.
Yeah. Well, let's take a look at, we're getting close to the end of the podcast. Let's take a look at some stocks I've been watching. So we've been all over a lot of the names that we been speaking about for a while, and they've been doing great, which is nice, But there's some other trades I've been noticing have been gaining strength. And again, a lot of my research, people say, like, oh, how do you follow these things? Like, what I look for is where's the price action very strong? Then I try and re-engineer what the story is. But if you take a look at analog devices, this had done pretty much nothing throughout the whole 24, 25 tech bull market. Now we're leading. Take a look at monolithic power. Same thing, hasn't done very much, but now we're leading. If you take a look at Texas Instruments, similar, hasn't done a whole lot, but now we've been strong. And so looking at these stocks, the common theme I'm seeing with a lot of these is that they make semiconductors, but they don't make the GPUs like NVIDIA makes. They're like the real world stuff, like sensors, actuators, all these things that, if you're going to be automating machines, automating warehouses, you need to know what temperatures are, distance, and all that kind of stuff. And that's where these, I'm simplifying here, of course, but that's where these kind of live, these three. They're kind of competitors with each other, a lot of overlap. And so it's interesting, whereas, everyone's been like glued to the screen with NVIDIA, which has done nothing for a long time, or, even like, let's say, a Broadcom, which has done nothing for quite some time. And then, slowly but slowly, like something like a monolithic power year to date is kind of really beating the pants off of everybody. And it's up from, what did we close out here in December? 900, we're at 1200, whereas when NVIDIA has done nothing, Qs have done nothing. So I have a small position in TXN, watching monolithic power very closely, but interesting group. And I think it plays a couple of angles. One, and also their fundamentals have been doing great, like monolithic power, that you can see the upswing. A lot of that I think is reindustrialization. A lot of what Trump is doing is trying to get domestic supply, domestic, infrastructure. That's going to play towards them. And I think what a cool kicker is if, all this stuff that Musk is talking about these Optimus robots and all this kind of stuff, well, I don't know if they come true or not, but if they do, they're going to need a lot of sensors so they don't walk around like the Terminator and just step on people. So it's going to be, I think this is an interesting group that's benefiting from all the domestic demand of data centers and automation and robotics. And if humanoid robots do take off, I can imagine it'll be like a tremendous amount of demand. So this is a group that I've been noticing and putting a lot more attention to.
No, again, this is what we've been kind of talking about this whole year, is this idea of looking into things where there's shortages,
Yeah.
and not being in the things that have abundance. And I mean, look at Chevron.
Yeah.
Energy. Are you kidding me? That thing never came down.
I wonder how much this is due to Venezuela. I know they had a big Venezuela presence, and then after with the whole like access to those fields. If we take a look at XLE, let's say the broader group, the broader group is heavily impacted by.
This stuff is crushing it.
Yeah. Some of the less international stocks, like let's say Diamondback or DVN haven't been as they're still doing fairly well. But Chevron and Exxon have been the real monsters here, I guess.
They have. Corning. I think you talked about Corning last week, if I'm not mistaken, right?
Yeah.
I mean, what? Are you kidding me?
Yeah.
Like, this is material stuff, I think, right? This is the areas where, again, I'll say it again, that I think you need to be focusing on.
Yeah.
Where the shortages are. Believe AI, don't believe AI, I don't care, okay? But this is where the shortages are. And I'll say it again about AI. I just said it a little while ago. I don't know what I'm talking about, okay? This stuff is way, way above my head, all right? I don't know. But if you ask me, it's happening, okay? We're seeing the proof that it's happening, right? These companies are cutting back on employees, and they are producing just as much, if not more, with less employees, right? Isn't that the whole thing with AI, right?
Productivity.
So it's happening, right? Whether I like it or whether I want it or whether I believe it, it doesn't matter. It's happening, right? A. B, in my view at least, it has to happen because national defense is, you know what I mean? Which is the last thing anybody's going to fool around with. I don't have to like it, right? I always say, I don't need my life to be any faster, okay? I really don't. And I don't want my life to be any faster, okay? So as far as I'm concerned, let's all stand up and say, we don't want AI, right? And let's all rebel against it, But that's not going to happen because the one person that does do it is going to have an advantage and be able to make more money. And so therefore the second person does it. And the third, it's just like these people who are like, women should never have worked, okay? That's what made everything more expensive because now you have two people in the family working rather than one. Okay, well, okay, good. Then your wife doesn't have to work. But your neighbor's wife is working, all right? So they're going to be able to buy the house. And so then, therefore, the person next door is going to do the same thing so that they can buy. And you're going to be left behind economically, whether you like it or not, right? So whether I want AI or you want AI or I want all this shit, it doesn't matter, right? Even if everybody in the United States didn't want it and we rebelled against it, it wouldn't matter because you still have to do it because China would do it.
Yeah.
And we're not, you can't lose your relative, whatever you have versus that in geopolitics. So it's happening,
And people have to take out the negative bias. Like, you could look at Microsoft or whatever and say, oh, look, they're spending all this money. They're not getting any kind of ROI or whatever. Look, instead of focusing on just them, who are they giving all of this money in CapEx to? Like they all guided up on, even though the market is not rewarding CapEx, Oracle got crushed, Amazon moved lower, Microsoft, but they're still guiding up on CapEx. By
$800 billion was announced just last week. Like that money is going somewhere, man.
For this year, not like that's long term. Like for
No,
this
for
year.
this year, and it's only going up more in the other years. That money is going somewhere, all right? And it's going to these things. It's going to energy. It's going to materials. It's going to rare earths. It's going to this stuff. They just made a big announcement with Brazil that they're going to do something with Brazil about the rare earths and all that shit. Mm-hmm. It's happening, whether you like it or not. Yeah. This is where you want to focus. And I'll say it again. This could be wrong. This could be right. Okay. I think that it points to right, but more importantly, the markets are pointing to it being right. Look at the stocks that we just looked at. They are saying this, right? They're saying it. So you're not only fighting the idea that it probably has to happen, you're fighting the tape, which is the bigger sin.
Yeah.
You want to tell me AI is bullshit and it's just, okay, good, then get ready to short stuff. Well, but don't short this stuff. I mean, even the software thing, right?
Yeah.
It is a function of AI working, not AI not working. Yeah. So everything is pointing to AI coming and AI working. Yeah. So why would you fight that? Whether whatever your personal feelings, my personal feelings are stop everything right now, man. Okay? Because, I don't like it. I'm old, I'm slow, I'm stupid. I can't keep up with this shit. You know what I mean? It's way beyond me and always will. And I know people talk about it. If you want to survive in the future, you got to get into it. You got to learn it. Well, I don't want to survive. Okay. I'm old enough. I've saved
Well,
enough.
the way I look at it is everyone, and it's normal. This is why more people are negative and fearful in the market than usually optimistic and aggressive because it's always self-preservation first. So we're always worried it's going to be the Terminator that's going to come out. Which, if it does, it's a really big problem. But if it doesn't, think about it, you're joking, you're old and tired, but what if with AI we could figure out a way to make you young and handsome and stupid? Well, you're already handsome, but
Excuse me,
younger.
I was going to say, we don't need AI for that, brother.
But even more so. And after that,
I hear you. I hear you. You know what? Let's get AI to fix my eye. I'm blind in this eye. I just went to the eye doctor this morning. It's horrible. I spend every night when I'm trying to fall asleep, every night runs through my brain. Is tomorrow morning the morning I'm going to wake up and this eye doesn't work and now I'm completely blind. That's my life. It's horrible. Okay? So yeah, let's fix that. And Elon Musk talking about that.
It would be a real game changer and going beyond just funny, videos and stuff. Like I think when we get to that, that's the promise that we're all hoping, as long as the bad doesn't come. But that's the good side. That would be really incredibly transformative. But let's make a whole lot of money in the meantime if we can.
Sometimes I even wonder about that, quite frankly. I really do. I really do. Is that good or is that necessarily good? Are we supposed to live to 200 years old? Do we even have enough resources for people to live to 200 years old? Or if we're going to all live to 200 years old, doesn't that mean that half of us have to move to Mars? I don't want to move to Mars. I wonder if that's even good. I don't know. And it doesn't matter. That's my point. It doesn't matter.
Yeah.
Whether I think it's good, whether you think it's good, whether Elon Musk thinks it's good, whether these freaking people are megalomaniac freakazoids, you know what I mean? I call them all Bond villains. I think they're all a bunch of Bond villains, living in their freaking lair up there in a volcano, you know what I mean? Thinking about how they're, petting their cat and thinking about how they're going to take over the world. That's what I think these people are.
Yeah.
But who cares? The bottom line is, the markets are saying it's real. The markets are saying it's working. We're trying to make money in the markets. You got to go with it until it fails.
And one thing, just before we wrap up, I think is important is whatever's working when the market is not working. It's never the same, but in my experience, when the market does finally go up, then they go vertical because then the chains are off and everyone, all the algos, all the trend following shops that were scared to be in the market because the parameters were saying you can't be this kind of, they all turn to fully risk on mode, and guess where all the money flows? It doesn't go to the stocks that are getting beaten up and losing. It's going to the winners. So whatever's doing well now, if the markets do better, you should, if you're going by theory, should be even higher. So it'll be one to watch for sure in the coming weeks and months.
Be in the strongest stuff.
Yeah.
That shouldn't be the strongest stuff.
Yeah.
Like I said, there's a difference. The market's going down and all the risk-off stuff is going up. That's one thing. That's normal. Mm-hmm. But if the shit's going down and this thing is supposed to be part of the shit and it's not, that's where you want to be. That's the tell. We're all looking for the tell.
Yeah.
And that is the tell,
Speaking of Casino Royale, when Bond's looking at Le Chiffre and he sees him touch, I don't know if you watched that movie, Casino Royale, and he touches the side of his head and that's the tell. And anyways, great movie.
That's the tell, and that's what we want. And does it work every single time? No, but over time that works. I promise you. Okay, I promise you that works over time, right? It's just like, I did a video this weekend talking about this, but it's just like you're sitting. Let's say you're playing poker, and you're playing, and sitting at your table is one of the greatest poker players, and you have a really good hand. And it's somewhat obvious that you have a pretty good hand, right? And this guy's raising into you. Is he raising into you because you got him fooled? Or is he raising into you because he knows you got a good hand, he knows that you're betting hard, and he knows that he has a better hand, right? Which one is more likely? Now, he could be bluffing, he could be trying to bluff you out. But if he's a real successful professional poker player, there's a much more higher probability that he knows you think he's bluffing, and that's why he has a better hand. That's the tell, right? And that's what a market that does that is, right? All these tech stocks are getting killed, and yet this one is all-time highs. Is that because it's bluffing, or is that because it's saying something? There's a tell there. Yeah. Most of the time, it's because there is a tell there.
Well,
believe it.
If everyone wants to learn more, there's CarusoInsights.com, there's CrowdedMarketReport.com, and subscribe, put the little bell thing on, or however YouTube works, and you'll let you know when we have our next podcast out. Until then, Jason, thanks so much. As always,
All right.
super fun to chat, and we'll see how all these trades work out next week.
Always good.